mic unmuted by mistake, but yeah, I can hear you.
Ah, cool. Awesome. Good to hear from you nonetheless,
Yeah.
Professor. Cool. Evening, everyone. I'm Asim Malola. For those that haven't met me yet, you would have heard my voice in the, well, I'm hoping that you heard my voice in the screencast that we released earlier this week, covering the pre-release information. And as promised, here's my face, so we can all sort of get to meet each other. Welcome to the APC 2022 workshop, where we'll, unlike the subject matter of this meeting invite, we are going to be covering task A for the accounting and task D for the accounting piece as well, and tax will be covered tomorrow. I hope you are all feeling, I know it is sort of late in the day, but I'm hoping that you still have a bit of energy for me. Today, we are going to be running through the IOD in a similar manner to in which you have been covering the same with the rest of the professional team earlier this week. We will focus on working through the IOD on a line-by-line basis, reading the IOD, establishing the direction in which we are being taken by the examiners, unpacking the information, right? So critical reading and using all of the work that we did in the pre-release phase of the assessment to perform whatever task is presented to us this evening. It's a highly interactive session. I'm only on my one screen today, so I actually won't be able to see the chat. So whatever you're going to see on your screen when I start sharing is what I'm seeing on my screen. So I can't see this chat. So I will be flipping back and forth every now and then, but I much prefer it. And I do encourage you all to please engage with me. So don't bother lifting your hand. I can't see that either. Just unmute and just jump in and join the conversation. So I'm obviously going to repeat myself because I believe I'm going to repeat myself in the sense of sort of establishing the ground rules, if you want to call them that, because I believe people will be trickling in as the minutes, hours go by. But I do really encourage you to just sort of be, just engage with me as quickly as possible. Let's avoid those weird, awkward silences when I ask for feedback. The more we engage, the more we speak, the more we're going to get out of this. And you know, it does drag along if there are significant periods of just silence, right? But I will try and direct the conversation as best I can. That's it in terms of ground rules. I mean, if you want to call them that. If you really still want to put a comment in the chat, by all means do so. But yeah, forgive me in advance for not seeing it sort of live in the session, because like I said, I won't be able to see it. So I'm going to share my screen so that you can sort of see what I'm seeing. And then also flip to the information on the day. The document that we're going to be working through. Shift my stance a bit here. And yeah, we're going to be, let's jump right in. So by way of just recapping the pre-release sort of information, hoping that you all watched the video and did a little bit of work from a refreshing perspective, and you worked through the trigger and at a high level the work, or as detailed as possible that you could during the week, the work what needed to be done from an IFRS 5 research perspective, and also that little bit of extra work on IFRS 13 as well. And I'm hoping that you came down and looked at the summary of the financial results of the pre-primary school, and you sort of did a little bit of an analysis in terms of doing a pro forma workings to the extent that you can, identifying what information you're missing, what you're expecting on the day for the examiner to give you. So you shift the narrative, right? So you come on the day with an expectation of the information that you are going to receive, and also at a high level, what you're going to do with the information depending on which direction the examiner goes, right? So I'm hoping you did all of that work, and then also work through the balance sheet as we worked through it in the screencast. So I'm just going to jump right into the IOD, and let's read through it. So the first accounting task was in document A, and it was an email from Susan to yourself, the financial assistant, and CC'd in there is Jerry. So very important already at this point, you almost have your audience of your potential audience for this response right there in the subject. So again, from a contextualizing perspective or framing your response, you've got a bit of a mix here in terms of somebody who should be a little bit close to financial sort of jargon and terminology, Susan, with someone that may not be so close, right? So just important there for context. But let's jump right in. Good morning. Apologies for the early email. We haven't had an opportunity yet to talk through your insights on the accounting consequences for disposing of the pre-primary schools. Some additional information that I didn't mention to you previously, right? And this is a classic, right? We spoke about this in the pre-release in the pre-release phase or the screencast phase of this workshop, that you are going to get more information on the day, right? So your questions are going to be designed in such a way that you are given direction in terms of what you need to do during the 5 days, but you are also given additional information that you need to consider on the day. And that will always then translate into how you are assessed in the task as well, because there's always going to be an emphasis then on ensuring that the grid or the manner in which you are assessed also pulls in whether or not you were able to respond to additional factors that you were presented with on the day. That's why trying to create some sort of pro forma response and just regurgitate that information in your research and put it on the response will never get you a successful outcome, because there's always that emphasis on making sure that you're demonstrating on the day thinking. So let's see where this information is going to take us, right? I'm going to open up the floor to discussion with you all in terms of what this information sort of meant to you as you were reading it, and which direction it took you, your thinking rather. So the pre-primary schools will be sold in a single transaction in their present condition and as a going concern. What were your thoughts from this comment from Susan? And if you're just joining us, I established some ground rules when we just started. Please feel free to just unmute your mics, jump in. The session is going to be highly interactive, can't avoid it. So please talk to me as we go along. So IOD, the pre-primary schools will be sold in a single transaction in their present condition and as a going concern. Thoughts? Any takers?
Hi, Asin.
Hello.
Okay, I think I'll go, let's just go first.
Yeah.
I think from my understanding is that first of all, there will be no the impairment S36 considerations, since like it is a CGU, but IS36 implications will not really affect this transaction, because I think on the next page they're saying that they're saying that they met the criteria for E+5 on the 31st December. So there won't be impairment considerations.
Okay, so let's unpack that statement. So the fact that we're selling this in a single transaction in its present condition and as a going concern, you're of the view that we're not going to have an impairment, IS36 impairment considerations. So if I can just ask a follow-on question on that, is this because you're saying there is no indicator of impairment? Or what is your reasoning behind why IS36 isn't applicable? And by the way, I do agree, Hopatso, on your point that it is a CGU, 100% agreed, right? So this pre-primary school, I mean, whether it's the lowest group of assets, I guess we can just ask that question. But ultimately, yeah, this is going to be a group of assets that can generate cash flows independently from other parts of Lampros. And we can see it from the results that were presented to us. So I do agree that this is a CGU. But I just want to unpack why you're of the view that IS36 isn't applicable.
Because there isn't any indication of impairment. And again, we'll be selling it in different conditions. So we will not be doing any modifications. And again, it's just a going concern. So
Yeah.
there isn't any factor or condition saying there must be an impairment.
Okay. So just to clarify, from this statement alone or in general, there isn't an indicator for that the pre-primary schools are impaired. And anyone else that also has some other views on this particular point, because this is actually a very important point. And this is obviously coming from, can come through from your pre-release research as well, right? So we're disposing of this as a going concern. And because we are, some might say, okay, cool, this isn't an indicator of impairment, but let's unpack that discussion point. Is there any other indicators that the pre-primary school could be impaired? Or are we all comfortable with the point that the IS36 is not going to be applicable for the pre-primary schools?
Hi, Asan.
Hello.
Yeah. I disagree with the previous candidate that IS36 won't be applicable. My view is that if you consider that, okay, I'm not responding to that question that you raised of just that one law. I'm just responding to the IS36 issue. My understanding is in the pre-release, there were indicators of impairment. I remember they talk about parents moving their kids to public school, and I think it was document 8. They talk about plenty of good schools around. I mean, when they wanted to buy that land and all stuff. And also the impact of COVID-19 that affected the economy and livelihoods. So I feel like those are already the changes to the to the schools that are a business raised to Lampros. So they can qualify as indicators of impairment.
Absolutely agreed, right? So looking at this a little bit more broadly, right, and extracting information from previous information and linking it to what we're seeing here. Yes, we're disposing of the pre-primary schools as a going concern, right? But it is also very important to unpack the reason why we are selling it. Because usually it is in the reason why we're selling it. And if you look to IS36, the indicators of impairment also speak to this type of indicator of impairment, right? Because it gives a few examples, which isn't an exhaustive list. And it's usually hidden, maybe not so hidden, in the reason why we're trying to sell, if it's an asset or a group of assets in this case, that there could be an indicator of impairment. And in this case, 100% agreed that because of the impact of COVID-19 and our discoveries in terms of the inability of us to pivot to an online offering for the pre-primary school and the strategic, the misalignment, therefore, with the strategic direction of Lampros, there is an indicator of impairment for the pre-primary school as a whole, right? So not an individual asset in the CGU, right? But the cash generating unit as a whole. And because of that, I'm then hoping that you all create an expectation that there should be some sort of impairment, rather there should be an impairment test and likely should be an impairment, right? So ultimately, remember the steps of IFRS 5, we need to account for everything per their underlying standards up until the date of reclassification, okay? At this point, we still don't know what date that is. At this point, we don't know whether or not we're going to have to ascertain that date as part of our response to this task. But what we do know for a fact is that we have to account for everything per the underlying standards that we looked at in the previous information. And it includes performing an impairment test in this particular facts or circumstances prior to transferring, or rather reclassifying, all the assets and liabilities into IFRS 5 and then sort of proceeding with the measurement criteria. Okay. Any other thoughts from this? So thanks for helping me unpack that IS 36 considerations points. Very, very, very important. And our expectation that we've created here, also very important. Any other points from this sentence here? The fact that we dispose, and I'm going to direct you a little bit now. The fact that we're disposing of this in a single transaction, does that jog anything for you?
Isn't it group of assets also?
Absolutely. Thanks, Shumani. Is it disposal disposing a group of assets? And what is important to note, right? And I guess I'm going to throw the question back to you all, right? We're definitely disposing of a group of assets here, and which are potentially going to be classified as a non-current asset for sale, non-current asset for sale. And a question that I want to throw to you, is this the same as a discontinued operation? Is a group of disposal of a group of assets the same thing as a discontinued operation? Put differently.
It's not.
Okay. Yeah, and why not, Shumani?
From the definition of the BEP and Appendix A, it says something that is different from the group of assets. Because it says a component that either has been disposed of or classified as held for sale. But yeah, it talks about the condition represents a separate major line of business. Yeah, but I felt like it's not the same when I was busy doing this.
Yeah, and I 100% agree with you. And I also love your thought process, right? And even if you stopped after you said Appendix A, I would have been completely happy with your response, right? You said no, because IFRS 5 Appendix A has other ideas, right? Because ultimately, that's exactly true. That's how you should be thinking through accounting, right? All of these things are defined, right? A group of assets is defined in the standard. A discontinued operation is defined in the standard, right? When asked, when you have that question in your mind, is this thing a discontinued operation, right? How do you answer your own question? Go to the standard, open it up, and apply the definition, and then conclude yay or nay, right? So a group of assets can be just a group of any assets, right, that don't have any relationship with one another, so long as we're disposing of them in a single transaction. This is not necessarily a discontinued operation. So this question here for a discontinued operation is still valid, right? So if I asked you, or I'm going to speak about it a bit later in the screencast, to think a little bit more about the definition of a discontinued operation and whether the pre-primary school meets the definition, but we'll discuss that point a bit later. Right, let's read the next bullet. We finalized the discussions with the external auditor, and we're in agreement that the pre-primary schools meet the definition of a disposal group. Okay, happy. What did I write here? Disposal group of assets. Happy, right? Confirms our thinking too, right? But I think in a single transaction, it was easy for us to conclude the same as well. All the criteria to classify the disposal group as held for sale in terms of IFRS 5 were met on 31 December 2021. Okay, what were we thinking when you read this, or when you read the statement now? All the criteria to classify the disposal group as held for sale in terms of IFRS 5 were met on 31 December 2021. What are your thoughts?
We can stop depreciating on the 31st of December.
Okay, so cease depreciating on the, on the 31st of December. So in other words, right, to sort of take a step back from Shumani's point, right? This is the date of reclassification, right? Where everything from a presentation perspective. Now remember, IFRS 5, right? It's split. The requirements in IFRS 5 are essentially split between the measurement criteria in IFRS 5 that has its own scope, right, and the presentation section of IFRS 5, right? From a presentation perspective, right, everything falls under the ambit from a presentation perspective. However, from a measurement perspective, right, remember to be cognizant of that scope, right? What is within the scope of the measurement provisions of IFRS 5? Everything else we measure per the underlying standards, right? And I'm hoping that you'd have all sort of, when you work through IFRS 5, and I'm just going to open up quickly, and you were at the scope section, you will see that measurement scope. Right, paragraph number 5 here, that speaks to the measurement provisions do not apply to all of those types of assets but still meet the presentation provisions of the standard. Okay. Awesome. Anything else?
So, as in, I just have a question.
Sure, go for it.
Isn't there a bit of a contradiction in terms of the date of 31st December? Because in the pre-release, they're saying that the decision was approved and agreed in the third quarter. So I can say around September, October. So isn't it a management? I mean, actually, the system of depreciation, isn't it when the management is satisfied? So why are we stopping in the 31st December, not stopping, should I say October or 31st, I mean 30th September? Because they're saying
September.
that.
Did they say third quarter? Didn't they say the third quarter, the last quarter, or did it give you a specific month?
During the third quarter. So they didn't give us a specific month, but third quarter should end in September.
Any thoughts from anyone else? Thanks so much for the question, Khopato. Any questions? Any comments from anyone else in the chat?
Isn't it like a change in the IOD that you have to be present, that the date can change? Like what you knew on the PRI can change in the IOD.
So I guess I agree with that point from a general perspective, right? So we always need to so two things, right? So let's talk from an approach to the exam perspective. Agree with you both, and Khopato also work in terms of taking information from the
Hi,
previous.
Asen.
Yeah, jump in.
On the pre-RI, they said that the board approved, but we were not told whether the requirements of IFRS 5 were met during the third quarter. They might have approved and then went on to process all the requirements of IFRS 5, which were met on the 31st. So on the pre-release, they did not tell us whether the IFRS 5 requirements were met. They just said that the board approved.
And yeah, I mean, I see you just gone for it, which is fantastic. Thanks. I'm gonna try to pronounce your name. Lotharis. Is it Lotharis? Lotharis. How do you pronounce your name? Did I get that correctly?
Lotharis.
Lotharis. Okay. Sorry about that. Yeah, absolutely, Lotharis. The IFRS 5 classification or classifying an asset or a group of disposal group as a non-current asset held for sale is not hinged on a directed decision on or management decisions, right? It's a very detailed assessment that you have to perform in order to meet the IFRS 5 criteria, right? Which the director approval is one piece, but there are far many more elements of getting that classification criteria met, right? And so paragraph 6 has the primary criteria, right? So we classify that non-current asset or disposal group as held for sale when the carrying value is going to be recovered principally through sale rather than continuing use. Okay, but when is this the case, right? This is the case when that disposal group is available for immediate sale in its present condition, right? That's already one requirement, subject only to customary clauses or terms and conditions customary to a sale. One piece. And then the other piece, not only must it be available for immediate sale, that sale must also be highly probable. And then highly probable is then unpacked in paragraph 8 here. And I think they're about, I mean, I wish that the standard setters put this in, like I said, A, B, C, D, E. I've got no idea why they put it in a massive paragraph like this. Because it makes it very difficult to read. But ultimately, there's probably about 5 or 6 sub-criteria in here, of which appropriate level of management or director approval is only but one. Okay, so I completely agree, Lotharis, on your point that there's much more things that we needed to consider before we can get comfort that this is a non-current asset held for sale. Okay, but principally, in terms of an approach to this exam, I completely agree with, and I'm very happy that you sort of linking the pre-list information and the IOD, right? Looking for those contradictions, because where there are valid contradictions, you must cite them. And completely agree with Shumani in saying that you should be you should also be open or ready to accept potential changes to the facts and circumstances that can come at you on the day. Okay, awesome stuff. Cool. So just to wrap up this conversation, there's no need to worry about when IFRS 5 classification criteria is met, right? All that entire part of your research null and void. Okay, but not to worry, because you have that other part of your research where you went through your thinking in terms of what you're going to do with those summaries of I see everyone's laughing. I'm hoping that wasn't your only research, because then that other research you did in terms of your analysis of the financial results becomes valid, and you're saving grace. I'm hoping you did it. So I'm seeing surprise reactions as well. Sorry, I keep looking down because I just put Teams on my phone, because in as much as I don't want to read comments, I want to see the names of anyone that's speaking, and I don't want to sort of go back and forth. So apologies if I keep sort of looking down. I'm looking at the Teams on my phone. Okay, we're in the process of preparing the draft annual financial statements for the year ended 31 December 2021. The accounting impact of classifying and measuring the pre-primary schools as a disposal group held for sale have not yet been adjusted in our draft financial statements. Okay, so fine. This makes sense, because ultimately, if you looked at the draft financials, you couldn't see that coming through. The disclosure that you would expect to see for a disposal group, and at this point, you then be sort of asking yourself, okay, fine, am I supposed to be the one now to draft this, to consider the impact? Like, what is the task? So the task is not yet clear whether or not it's an execute task, or am I supposed to do it, or is it a review task? But either way, hoping you're ready. However, I have put together a draft note for the annual financial statements with my supporting workings using the summarized information I already shared with you previously. Okay, so now a little bit more direction in terms of where this task is going, right? It's definitely not going to be us doing this, because we've been clearly told that it's already been done. But very importantly, this last sentence here, using the summarized information that I shared with you previously. So the examiner here specifically scoped, well, I mean, it's always scoped in, right? But almost like a nice reminder here that, listen, all the work that you did in the pre-release period on that information is super valid in the work that you're going to do, because I use the same information to get to what I'm going to present to you. Okay, so all those expectations that you created now come in full force. Okay, please review my draft workings and note to the annual financial statements, right? And I just want to stop there. Okay. Please review my draft workings and note to the financial statements, right? Very clearly, this is the beginning of the task. Now, I want to open it up to the floor. Just reading this sentence only, right? What have you been asked to do? Because now this is make or break, right? If you don't answer all components of this task, coming out with a C it's not possible. I don't want to say it's not possible. Your chances are very slim, right? Because you never know what's going to come at you. Answering all components of a task is vital to coming out with a competent response. So reading only what I've highlighted, right? Without the confusion of everything that comes later, right? Because again, I think what can happen sometimes is we're sort of in a hurry to read all of this other stuff, right? And we don't pay particular attention or have particular focus or analyze to a sufficient degree each piece one at a time and analyze how that impacts your response. Okay, so reading only what I've highlighted there, what are we being asked to do?
Hi, Austin. So
Hello.
I think from my perspective, we've been asked to review the workings and then review the notes to the annual financial statement. So I think you've got like 2 tasks from that one line.
Absolutely.
So just on that note, my question then is in terms of, you know, like you would allocate that I'm going to spend 1 hour on this task, and then on this 1 hour, like how do I then allocate it between like this subtask, like in order of importance? Would I allocate it like more time on the first one, or like equally they are both important, or like what is the marker going to look at? Sorry, thank you.
Great question. And I'm going to caveat it first by saying that time allocation is always going to require your judgment, and you are never going to have a one size fits all sort of, because at the ITC level, it's like, oh, just take the mark allocation, multiply by 1.5, boom, there's the amount of time that you need to allocate to a specific task or require. Okay, APC out the window. Okay, you need to apply your professional judgment in terms of knowing or assessing the relative, I don't want to say relative importance of a task, but rather I want to say how much time you're going to not only allocate to a specific task, but also how much time you're going to allocate to the subtasks. So to answer your specific question on the subtasks, right, it depends, right? So at this point in time, I cannot answer the question because I do not know the extent of the workings that I'm going to encounter at the bottom here while I'm reading, and I don't know the extent to which the note that I'm going to see at the bottom that I'm reading, right? So ideally, right, what you want to have in your sort of when you're sort of reading this, when you on the day, you want to almost like read this IOD one. I mean, at least what I would do, read the whole IOD one just to get that bird's eye view of what's going on, right? And then you can sort of allocate your time in terms of your bird's eye view. And then when you read it again, right, you almost have like an indication in terms of the split, right? So if I can just scroll down here quickly, this is the workings bit, okay? And then this is the draft annual financial statements, okay? Now, in just spitballing this, I can see that the draft workings here have far more, it's much more rich in terms of content and what I can see in terms of potential issues. And maybe when you read the first time, you also had the same inclination. So then just by looking at that, it would then make sense for me then to skew more time towards unpacking the workings than I would apply to actually reviewing the note, right? How much time, right? Depends on your judgment. But the key point, firstly, is you need to cover both, right? And the amount of time you allocate to each subcomponent will then depend on your judgment. And I've just sort of demonstrated a little bit in terms of how I would apply judgment in terms of sub-allocating time to the subcomponents of the task. I'm hoping that was useful. I always struggle, or it's always difficult answering those type of questions because unfortunately there isn't a hard and fastened answer to that question. Okay, cool.
Okay, thank you.
Got it. Okay, cool. Awesome. All right. Now, completely agree with your point in terms of the 2 tasks, right? Review the workings, review the note. Hundreds. But now, what is the review? Can somebody share with us all what a review is to them or to you? What is a review? What do you do?
Thank you.
No problem, Makoma. I think that probably came a bit late, but yeah, no stress. What is a review? Jump in. Don't bother with the hand, just jump in. Yeah, hi.
Oh, okay. From my side, a review is, okay, in this case, they're asking me to review the errors and omissions. So I would check what is wrong and why is it wrong, and then state also the recommended solution or the right approach that should have been taken.
Absolutely. Any other takers? Is this everything, or are we done? Completely agree with that, right? A review involves, right? What is wrong? Identifying what is wrong, articulating why it is wrong, and making a recommendation, right? Absolutely agree with that.
Can I come in there?
Sorry?
Can I come in there with a
Yeah,
question?
of course. Jump in.
Okay. Like, I just want to go back to your first question without reading the rest. When you said, what is a review?
Yeah.
And then you will correct me. Am I wrong if I say, like, let's say the question didn't say errors and omissions?
Yeah, no.
Just said
we're
review.
ignoring all of that stuff now.
Like how you asked it at the
Yes,
beginning.
Exactly. Yeah.
Am I right
what
if
I
I
want.
say then a review is both positives and negatives?
Yeah.
Is that correct?
Yeah.
To say, okay, yeah, obviously I will lean more on what went wrong, and also highlight what went right. Is that okay? Sure.
Yeah, and I agree with that point, right? Lean, because I mean, it's an assessment, right? It's APC, right? The competencies, the indicators are going to be things that are not correct, right? It's no secret. So I like what you said there. I'm going to lean more into what is incorrect, right? Because ultimately, more things are going to be incorrect. But I still need to articulate or identify the things that I agree with, or the things that I'm happy with very quickly, right? I agree with this because of that, or just quickly, right? Don't need to spend too much time here, right? The focus should be down here, right? But let's unpack this a little bit more, because what is wrong, okay? We can also subdivide into different things that can go wrong, okay? And this is something that you always need to remember when you are performing your reviews, right? Because a lot of the focus is here. I'm going to write incorrectness, but that's not the word. Technical issues. Okay, let me put issues rather. No, technically incorrect. That's better, right? There's always a focus on what is technically incorrect, right? But there's less of a focus in these two other areas of things that can be wrong. And Randani speaks about this a lot, right? Right? Is what I'm reading reasonable? Right? Not enough focus there. And the tricky thing is at an APC level, right? So coming from ITC, we're very used to exams or scenarios that try and limit the amount of management judgment, right? So we know from an accounting perspective, applying judgment is always going to be an intricate part of producing a set of financial statements, right? Making judgments and making estimates, right? It sits in IS1, and where we make significant judgments or we have significant estimates, IS1 wants us to make disclosures of that, right? But remember that point. It's almost like the expert point. Like let's get the work of an expert, right? Never said for accounting, but if you have a particular point where you have the view that significant judgment has been applied, right? Always just throw in there that we should consider making disclosures, right? Because it is a disclosure requirement. Now, at an APC level, right? So ITC level, you're told useful life is 5 years for this PPE, for this item, for this, let's say useful life is 10 years for this computer, right? Laptop. At ITC level, like, okay, I'm going to take the cost of my laptop divided by 10 years, and I'm going to account for depreciation, debit depreciation, credit, accumulated depreciation for the laptop. At an APC level, right, your thinking needs to transcend that. You need to say, okay, fine, I'm going to use the 10 years for the purposes of my response, but I'm going to highlight that I'm actually very concerned that we have such a high useful life for a laptop in this environment where technology is advancing so quickly. I mean, there's a new laptop every single year. All right. So almost that element of being able to look at something and say, okay, yeah, technically speaking, we can apply the IFRS, but from a reasonability perspective, from applying my judgment, this looks unreasonable. And these are the reasons why I think this is unreasonable. Okay. A very crucial part of your reviews that need to become a habit now when you do accounting reviews, and you need to sort of drop that habit from ITC where you just accept everything at face value, right? You need to question what you've been given, the information you've been given, right? Using some expectation that you've created, right? And the last piece, which is always the hardest, is completeness. Right? Why is completeness difficult? Completeness is difficult because you need to come through with an expectation. And that is why when we spoke through the screencast earlier this week, in both of the screencasts, right, I tried to emphasize that work that you do in the pre-release period, where you're just not copying and pasting publications, you're not copying and pasting stuff from the standard, but you're trying to apply it as much as you can, right? Trying to pick up where you've got gaps in the information, right? And then obviously think about, okay, cool, what am I going to do with this information? Because one way or the other. But more importantly, identifying where you need information, right? And also maybe some thinking about how you can go about getting that information, right? If it's a Google search, if you can ask somebody, if you can get an expert to do it, or whatever the case may be. Because ultimately, you're creating expectations. And with those expectations, you can now perform completeness tests in your reviews, right? And these typically are those that set your response above the rest, right? Actually, also these ones as well. Sometimes they're the ones that give you those high, that set your response above the rest. Okay, so remember with the what is wrong or the incorrect stuff, right? Always think about these three elements, right? What's technically incorrect, which is what we always focus on. Reasonability, right? So don't take all the information you're given at face value. And the completeness test. Come through with an expectation, right? Flip the script. Don't come read the IOD surprised every time you read everything. Your thinking should be, oh yeah, I was expecting that. Oh, fantastic. You gave me this information. Great. Now I know exactly what I'm going to do with this. Okay. Right. Now, coming from, I think it was Krulekani that said it. Krulekani said it, that ignoring this next sentence, right? Because this next sentence now becomes important, right? And highlight with reasons. Now, this should be, whatchamacallit? It should be like a reflex. Like I shouldn't have to tell you this, right? Try and always make sure that you have these three components, right? I really liked what was summarized here. What is wrong, right? Identify the issue. Why is it wrong, right? That's where you bring in the IFRS and the application, and then make a recommendation. Therefore, we need to do this, right? Try and always have this structure to your review comments. Okay, for the things that are correct, yeah, I agree with this treatment because of that. Okay, simple as that. Cool. But now when you bring in this next sentence, right, and highlight with reasons any errors and or omissions. Okay. This now, and I'm sure everyone is probably on that page, so I'm not going to bother sort of opening up the floor for a response. This then scopes out the first bullet, because the examiner here only wants the errors and omissions. Now, and or omissions, right? Again, this is not here for fun, people. This is telling you that you can expect some incompleteness. You can expect things to be missed, right? Somebody's knocking at the door, like remember completeness in your review, right? So the examiner is trying to tell me here, right? I know they said and or, right? But you can pretty much ignore the or, right? It's definitely and. The examiner is trying to tell me that errors and omissions, I should give both of them equal attention, right? I mean, the marking grid may not reflect a clean 50-50, but I think here they're trying to tell us that there's a substantial portion of the grid that relates to omissions and a substantial portion of the grid that relates to errors. Be sure to give both a good amount of attention. Okay, you don't have to worry about checking the mathematical accuracy of the workings. And note, and it is also not necessary to recalculate amounts at this stage. Okay, so don't do any recalculations. I'm sure you're all comfortable with that. But that's not to say that you can't sort of, depending on what we're going to see in the workings, you can't always go, it doesn't mean that you can't go back and check things, right? Or maybe tie in some numbers, or maybe something has changed, right? It doesn't mean that you can't do that. But it just means don't cost and cross cost, all that lovely stuff. Okay, looking forward to your input. Thanks in advance. Right, so now our task is very clear. But now one thing that I just want to highlight visually for you, right, is that this is what our task look like. So I'm going to copy this, right, and put it under here. So for the review of the workings, I need to focus on, I need to say what is wrong, why it is wrong, make a recommendation, focusing on technical stuff, reasonability and completeness, right? And then for the notes to the annual financial statements, do the same thing. Okay, so do you see how much there is to talk about here, right? So think of it like as a matrix, right? And don't be biased one way towards the other, right? Because it's very easy to sort of get in the middle of the task and then sort of lose yourself, and you don't know where you're going. This is a plan. Granted, I've typed it out, so it's very detailed, but this is what a plan looks like. Now, I've got I've got this on top of my page somewhere, right? And you can use one words as trigger words for you just to remind you, right? So you don't have to write it out like this. But ultimately, I always have something that I need to come back to refer to. And before I move on to the next task, in fact, before I am 10 minutes from having to move on to my next task, right? And I notice the choice of the words my choice of words. When I am 10 minutes before I have to move on to the next task, right? The discipline. I can come back to this thing here and I can just check quickly that I've covered everything. And if I've completely went astray and I haven't tackled this, and I'm 10 minutes and I need to go to the next task, I'm going to stop whatever I'm doing. I'm going to go to number 2 quickly and do as much as I can in the 10 minutes. Once the 10 minutes is up, you're moving on to the next task. Okay. If you have extra time in the end, so always plan for some extra for like spell checks and stuff, you can come back and add more. But you always need to make sure that you're at the very minimum cover each task. Because again, if you don't finish the APC case study, right, you don't even have to wait for SACA to give results in March, right? You're not going to be successful. So you need to have that discipline. Okay, awesome stuff. I see it resonates with a few people. Or the first and the second statement. So let's move on to see what we have been asked to do. Okay, next thingy is, one thing that I forgot to mention. How are we going to do this? So I'm targeting 7:30 to be finished with this task. Then we'll take a 20-minute breather, and then we'll come back from then up until 9 o'clock to do the second task, right? So I often get the question, when's the break? So just to give you a bit more clarity on that, right? So I'm targeting 7:30 to be done with this one. Okay, let's jump right in. Annexure 1, draft workings and notes to the annual financial statements. This is the draft workings. Because the IFRS 5 criteria were met on 31 December 2021, the reporting date, the pre-primary school disposal group held for sale needs to be measured at fair value. Let's actually just stop there. Thoughts? Because the IFRS 5 criteria were met on 31 December 2021, which is also the reporting date, the pre-primary school needs to be measured at fair value. And when I say thoughts, I want to know if you're comfortable. And if you're comfortable, why? And I want to know if you're uncomfortable. And if you're uncomfortable, why? Jump in.
Isn't that incorrect?
Why?
Because the standard says that it should be measured. It should measure the group as held for sale at the lower of carrying amount and or fair value less cost to sale.
Absolutely. Lower of the carrying amount and fair value less cost to sell. Now, this already feels great, right? Because now we almost like garnering momentum, right? So it's like literally from the first sentence, like boom, we already figured out something that's wrong, right? So this is probably going to end well, right? But also remember the format, right? So this is the note that I'm making while I'm busy reading through, right? But when I'm responding to this, right? And what I usually do, and literally do this unashamedly because no one is judging, right? Always start your review comments with "I note," right? Or "it appears," right? Or "it is apparent," right? Because or from X section, right? This forces you to identify the issue, right? Because what is it that you are noting or that you can see? Okay, I note your workings states that the disposal group should be measured at fair value at 31 December 2021. This is incorrect. Okay, fantastic, right? But why so? Or madam, why is it incorrect, right? As Shumani said, IFRS 5 states you don't need references, right? But just throw it in generally the standard, just makes your response flow better, right? Even if you said IFRS states, if you don't know what standard it is, which I'm hoping none of you have that issue, that's fine too, right? But you don't need the specific reference. IFRS states that the disposal group should be measured at the lower of the carrying amount and fair value less cost to sell, right? This is now essentially stating the issue. At this point, it'd be very difficult to make a recommendation. What you can say is, therefore, I guess workings need to be updated. Therefore, your narrative should be updated. But in truth, I wouldn't be narrative and calculations should be updated. Narrative and calculations should be updated or adjusted. Right? Cool. I think I heard something. No, was that a mistake?
Yes,
cool.
Sorry, Asim.
No stress, no need to apologize. Cool. So we have identified, so this is my note while I'm busy reading this thing, right? And this is how essentially it's going to appear in my response, right? A nice and complete response with the issue, with the why, and with the recommendation at the end. Right? The recommendation felt a bit forced, but we just made it work just to ensure that our response was complete. Okay, so be sure to keep this approach. My estimate of fair value and expected selling price is, my estimate of the fair value and expected selling price is 55 million. What are your thoughts?
Don't we now have to confirm that one? Because like with the measurement adjustment, the fair value of the disposal group, before we comment on that line, don't we now have to go through that to confirm 5,000 if it's correct or not?
Confirm if the 55,000 is correct. 55 million, sorry. Can you give me? I'm not sure I completely understand your point, Shumani. So can you please clarify for me? Sorry.
The fair value of the disposal group, no? It's 55,000 they're saying here, but we need to first confirm if that amount is correct using the measurement adjustment there on the table. Isn't that so?
We need to confirm which measurement adjustment. This one, yeah.
Sorry?
Which measurement adjustment?
Okay, I'm incorrect now. I see now. Okay, yeah, the fair value of the disposal group. Because we need to confirm if it's correct because they say that my estimate is that It's 5 million.
Oh,
right? So
and-
using the standard, don't you have now to, okay, I think my thought process was wrong from the beginning, so I'm trying to tie it up now. So yeah, let me think about it properly.
Yeah, no, no problem, Shumani, but I'm liking the direction that you've led us all into, right? The fair value is 55 million. Confirm if this is correct using the standard, because what has happened? So Shumani, you've correctly pointed out, okay, I've been given a fair value, and I've got an accounting standard that deals with fair values, right? So from what I'm reading, and that definition of fair value that I know in that particular standard, IFRS 13, is there anything to be concerned about here? Is there any alarm bells going off, or questions that you have, right? Because you don't need to have all the answers. Are there any questions, concerns, thoughts that you have, considering the statement that you're reading here and the definition of fair value that is sitting in IFRS 13?
Oh, yeah. Did they consider the market, like the every state in condition that we have? Did they meet them before they can have the price of the estimate?
Absolutely. Date, which is probably going to get, right? Right. Fair value is defined. Okay. And a fair value is not an expected, it's the starting point is an expected selling price, all right? So it is an exit price. So I'm happy with that. Right? But there's many more pieces of this, and I mean measurement date fine, 31 December. That's I'm also happy with. Right? But there's many more pieces to this fair value, right? In terms of assumption, so is this expected selling price to the counterparty of our contract, right? Is that what we're saying is the best representation of fair value? Or how are we bringing through the correct assumptions when we're measuring a fair value in terms of the market participants and the market, right? Principal market versus most advantageous market. Market participants that are at arm's length, sort of trying to negotiate in their best interest with all the information available. Are we assuming all of those things, or is it just one person's expectation of what we can sell this thing? So how do we determine this 55, and is that in compliance with IFRS 13? Okay, absolutely agree with that thought process. Any other thoughts or questions at this point? And I'm actually going to try to direct you a little bit. In terms of the discussion that we had with the useful life, right? When I was explaining this point, reasonability, right? With the useful life, right? Because remember, ITC days, I just take their useful life of 10 years, and then I do what I need to do with that useful life. Okay. APC level, let's kill that habit. Okay. At ITC, I would have just taken this 55 and I would do what I need to do with the 55 million. Okay. APC level, let's take it a step further. Is this 55 million reasonable in your mind? Okay. And I want to know what you're basing that reasonability on. Rundani always says you can't perform a reasonability test if you haven't established an expectation or what you think it should be. So I want to understand whether this 55 million in your mind is reasonable and how you came to that conclusion. Any thoughts? Or how you would go about getting to that conclusion if you don't want to give a sort of solid answer. And I'm just going to switch on the lights in this room quickly while I'm still listening. Just give me a second to switch on the lights. Go. Anyone? I didn't hear anything yet. 55 million. Did anyone think about whether or not this number is reasonable?
I see.
Hello?
I'm gonna try this one.
Yeah, go for it.
Yeah, if I look at the statement of financial position in the pre-release, the total assets sitting at 76.55 million. Then if I remove the cash there, we're left with say 66. million. I mean, because we won't sell the cash. And then if we, I see on the statement of profit and loss, they didn't impair there was no impairment recognized. So I would expect them to kind of impair the school, because there were some indicators of impairment, because there was like some internal factors, because they want to dispose the subsidiary, and on the external factors, we knew that they couldn't the pre-primary division was not able to adopt to that other new online system. So so I would say the impairment, or maybe we're now at 65 in 10 million impairment. It's just a thumbs up now.
Sure.
But just comparing to the net asset value, but if you try and do that free cash flow, I don't know where we end, but they just have a operating profit of somehow from the income statement. I don't know how they will value the schools. I don't, yeah.
Yeah. So I'm sort of liking where your points are going, and that's exactly it, right? So ultimately there's no right or wrong answer, but there is a manner in which you can create a valid sort of expectation of what you want to see. So you could compare this to the profitability of this company, right? Like you did, and said, a profit for the year of 1.6 million. Maybe EBITDA is a more representative measure, but I mean, if we had to put the impairment here, which we believe needs to be here, this thing could be loss making, right? But maybe if we did it before all of those, if we look at EBITDA, maybe it would give us a more representative number. But even that would probably be quite a tiny sort of profitability number. If we go to the balance sheet, right, we look at the net assets of this company, right, 76 minus 37. And if you minus the cash of 10, you're probably looking at, let's say, 47, 36, and then you bring in the impairments of another 10, you probably look at 26 net asset value, but now we're sort of setting it for 55. So are you comfortable with that premium there on the net assets of the company? Or when you compare the profitability, are you comfortable with this valuation or the implied multiple that is being reflected here, right? All of those points are super valid and become relevant. Now, obviously, don't dwell in trying to make this point, right? So don't spend like half a page trying to make it, right? But 1 or 2 sentences just to establish that I'm seeing this 55 million, right? I'm seeing what you're saying here, but for X, Y, Z reason, I don't think this is reasonable. But and also, if it is reasonable to you, that would be scoped out of this question, right? Because we're only looking for any negative stuff. Okay, but if it's unreasonable, just like say 55 million, I see what you expect selling prices, but based on these factors, I believe it's a bit of an overstatement, right? And that typically will be, like I mentioned earlier, those points that will set your response above the rest. Now, it's not to say usually points like these are not like the primary points, right? They're usually those over and above points that are the nice to have, but very important to think in this manner going forward generally, because it may be the nice to have point in the accounting task, but in the management accounting and finance task, it is the primary point that you need to be considering, right? So bringing those skills that you use in responding to management accounting and finance into accounting tasks or accounting dominant tasks to generate those indicators that set your response above the rest. Okay, cool. So let's jump into the nitty-gritties here. So measurement adjustments, notes, financial year 2021, we got rounding to 1,000. Let's check out the first line.
Can I ask a question before you move on there?
Yes, sure.
I don't know, I'm just sitting here thinking, should you question everything, or it's a general question, you know, or if there is nothing to question, does that somehow gives you a signal that you're missing something?
Yeah.
I'm sure you get where I'm trying to go, because there are somewhere where you just read and you're like, okay, I want to question stuff, but I don't see what to question. Does that now then becomes an indicator that, haha, you're missing something?
Yeah,
I don't want to be questioning everything all over the show.
yeah. It's a great question. The idea is not to become obsessive and like just to your point, question everything along the line. But I guess the message is have a questioning mind, right? Because to your point, if there isn't nothing to question, then there's nothing to question, right? Then it's fine. Move on. Don't obsess. Don't dwell. Okay. But the message is just have a questioning mind. Get into the habit of not just accepting things that you have been given at face value, and always just taking a quick second just to think through what it is exactly that you are being asked, right? So critical thinking, it starts with asking the right questions. So in your mind, as you read things, you must always have that question in mind. And as you can see, as I read things as well, like I'm always asking you questions, right? I'm like, what are your thoughts? What is the impact? Does this tie into anything accounting? Is this reasonable? So I'm always asking you a question, and that's almost trying to prompt the thinking. So you need to be doing that in your mind. Have that question in mind, but don't obsess over everything. Okay, I hope that answers your question.
It does, but sorry, maybe I missed something. Just coming back to that 55 million, I don't know if I missed it. What was our conclusion? Was it the 55 million reasonable? I remember we looked at assets, we looked at profit.
Yeah,
I didn't get the conclusion.
So I guess the conclusion is based on your reasoning, right? So what we concluded on is the basis which you can draw a conclusion, right? You can use the net asset value, or you can use the profitability of the company. I think on both bases, the valuation is quite rich, right? In terms of the implied multiple here. If you look at the value versus EBITDA of a business that is apparently not going to do so well, right? The valuation does appear quite rich if you look at both factors. So that I would say would be our conclusion. But more importantly, the basis on which we made the conclusion, I think, is more the key takeaway. Okay. Cool. Start with the carrying amount. Start with the carrying amount, net asset value of the pre-primary schools disposal group at the date the held for sale criteria is met. Right, so total assets 76,555, less total liabilities 37,636. Right, a quick check. 555, 636. Okay, happy. And this is different. I'm not going to recalculate this because I've been told not to. Okay. Thoughts. So for my measurement adjustments, okay, and you know what I'm actually going to do is, before I go into thoughts, because what's important is the context, right? So ideally you would have read this once first and then sort of jump into the detail. So what I'm going to do, I'm going to simulate that a little bit, and I'm going to sort of run through every single one of the lines, so at least we know what the calculation is trying to achieve, and then we can sort of come back to critiquing each line, right? So starting with carrying the net asset value of the pre-primary schools. Then they're adding back depreciation on the furniture, equipment and fittings, and the amortization on the intangibles. And then they're adding a fair value adjustment on the land. So they seem to be making adjustments to this net asset value. They're minusing the cost incurred as a result of the disposal, adding back deferred tax liabilities and current tax liabilities to get a sum after the adjustments of the pre-primary school. They're comparing that to the fair value of the disposal group, and it looks like they're recognizing a fair value gain of 8.2 million because the fair value exceeds the adjusted net asset value of the pre-primary schools. Okay, so that's essentially, looks like what they're trying to do here is they're trying to calculate the IFRS 5 remeasurement, which in this case, they've come to 8272. Right. So let's go all the way back to the top. Excuse me.
A quick question, Asane,
yeah,
before you continue.
Mm-hmm.
With the carrying amount,
Mm-hmm.
do we have to take everything Okay, at the beginning, do we have to take everything, or we need to take the liability associated with the asset, or we need to actually adjust them while going down? We start with the full carrying amounts of everything, and then we adjust, or we need to take the liabilities associated with those assets for the group of disposal.
Yes. So if I understand your question correctly, you need to consider it all, because we're disposing of this thing as a going concern in a single transaction.
Yes.
So you need to consider both the assets and the liabilities. You can also
And
look
then-
at, yeah, sorry.
The one not associated, then I start now or adjusting them going down, because the definition says that it needs to be the liability associated with those assets. So meaning we don't have to take all the liabilities.
Yes.
But on this instant, they took the full balance of 636, which I felt like not correct, because not everything's associated with those assets. So my question is that, do we now have to comment that that balance is wrong, or do we have to go and adjust and say that they didn't adjust for these liabilities?
So what I like what you're doing, Shumani, is, okay, so this is what you're trying to do. We're trying to start at the net asset value of the pre-primary schools. Right? You're like, okay, happy, we can do that. And we can take the total, we can take the total numbers, the total assets and the total liabilities. However, if we're going to take this approach, these are my expected adjustments, right? And that is major key, because Shumani, now you're coming through with an expectation. Okay, what do I expect? I expect the unassociated, that's even a word, unassociated liabilities to be removed, right? Can you throw in an example of anything that you think could be not associated with this disposal? Something that we're not, if we're going to transfer this thing as a going concern, okay, we wouldn't be transferring to the purchaser. Can you think of any liability?
Deferred tax is for Lampros, it's not going to be taken through.
Absolutely. For example, deferred tax and the current tax, which will be settled. Right, absolutely. Completely agreed with your point and your logic. So when I work through all of this thing here, this net asset value situation, right? I'm expecting that I'm going to see an adjustment for those liabilities.
So meaning I don't have to comment on the carrying amount. You can just have to have an expectation, but you don't even have to say it's wrong or not wrong. It's fine.
Well, we'll find out. So
Okay.
I guess at this point, we're creating an expectation that we're going to work through all of these adjustments to see whether or not we see the adjustment that we expect to see. If we don't, we can raise the point. If we do, then we're sort of comfortable.
Okay.
Yeah. Cool. Lost my chain of thought. Okay, cool. So this is the calculation that we're trying to do, right? So let's start working from the top. We're starting with the net asset value of the pre-primary schools. And let's continue on Shumani's thought process here, right? If we're starting with the carrying value of the pre-primary schools, as per this balance sheet, okay? The first thing we say, what are our expectations? We expect to remove the unassociated liabilities, to which we've got two examples. Happy. Any other expectations? Sorry. Do you have any other expectations of the adjustments that follow? Is there anything else that we need to do before we recalculate our IFRS 5 remeasurement? Is there anything that you can think of that you'd expect to see?
We need to stop depreciating and
Okay.
making any impairments.
Okay, so stop depreciating. And what did you say about impairments?
So we need to stop depreciating, amortizing, and no further impairments unless there is an impairment indicator based on the lower of recoverable amount and the carrying amount, if we're given that.
Amortizing, and you said, I want to pick up on a point you said. You said no, no impairment unless there's an indicator. But you can answer that question. Is there an indicator here?
So we only have the fair value as cost to sale. You were not given the value in use. So it looks like the fair value is more than the carrying amount, so there is no impairment.
Okay, right. So you say that because the fair value, so there is an indicator. I'm just going to take a step back. There is an indicator of impairment here, right? Therefore, perform impairment test. But the fair value less cost to sell is greater than the carrying amount of the discount. So not expecting an impact. That a fair reflection of what you said, eh?
Yes.
Cool. Right? Fantastic. Agreed. So one thing that I want to highlight to you, which you referred to, but I just want to highlight to everyone else, not just to you, to everyone, is in IS36, it gives specific scenarios where you don't need to determine both a fair value and a recoverable amount, where you can either do one or the other, and use that amount as the, sorry, I've messed up my terms. IS36, recoverable amount, greater of value in use and fair value less cost to sell. There are some scenarios where the standard says you don't need to determine both. Okay, it's not always necessary to determine both. And it goes and gives a bunch of examples as to when you don't have to determine both. But there's a very interesting one here that it has where you can use your fair value as a recoverable amount. If there's no reason to believe that an asset's value in use materially exceeds its fair value less cost of disposal, the asset's fair value less cost of disposal may be used as a recoverable amount. This is often the case when the asset is held for disposal. Okay, so when you have a non-current asset held for sale, right, and you need to perform an impairment test before you reclassify, that the moment before you reclassify is actually one of the unique scenarios, one of the very few, in fact, the only unique scenario, the only accepted unique scenario where you can use your fair value less cost to sell as your recoverable amount, because there's no reason to believe that the value in use will be any different. Okay, so just a little bit of an FYI there to sort of just give support to the statement down here. Cool. Let's go and stop depreciating and amortizing. I agree, but the key question is when? When do we stop depreciating and amortizing?
On the date that the criteria is met.
Absolutely, which is 31 December 2021. Okay, let's jump right into this. I don't think we're going to finish this, so you may have to encourage after the break, but it's all good. We'll persevere. Next slide. Add back depreciation on furniture, equipment and fittings, and amortization intangible assets. 1464 plus 139, right? Quickly check the other side here. Here we go, 1464, 139. This looks like everything, right? Everything has been reversed. What are our views on that? Are you comfortable with that reversal of the depreciation and amortization?
No.
Why not?
Because the amortization was recognized 2021 reporting period, and then the requirements were met on 31 December 2021. So we were supposed to just stop depreciation for that day. And once those ones that have been there, they must be left the way it is. And then once we classify, yeah, we can stop depreciating.
Absolutely. I note that your workings reversed what appears to be the full year depreciation and amortization of the furniture, equipment, and fittings of 1643. This is not correct. Since the criteria for classification as a disposal group held for sale was on 31 December 2021. IFRS 5 requires that the assets are accounted for per their respective standards prior to reclassification. Therefore, we cannot reverse the depreciation. Okay, that's my recommendation. Therefore, we cannot reverse the depreciation and amortization because it occurred prior to reclassification. Okay, same formula, right? Issue, reason, recommendation. I've got my point in the bank, and you can see it's roughly the same, the same length there of my response. Okay, so rinse and repeat, right? Literally, if your entire response is I note, it's actually a good thing, right? You're doing something right because your structure is the same. Sorry, I've got a bunch of comments in the chat. Apologies. Let me just read all of this. Haven't been monitoring. We need to source value, how to obtain. Okay, thanks, Brighton. A question, the reusability of the estimate FS 13 hierarchy, observable inputs, and compared to research acquisitions, everything Curo. Okay. Actually, I like that. Colossa, I really do wish you, I wish you sort of just chimed in by unmuting. But yeah, agreed. So think about the fair value hierarchy. Okay, cool, in terms of disclosures. But I like this last point that you made here, right? Compare, like if there were any recent acquisitions that you may have encountered in your research, but it's not to say that like this is work that you need to have done. But let's say you did that work, right? You saw some recent acquisitions, some of your research, and maybe you so happened to see what multiple that acquisition or disposal was at, right? You can use that as a basis of your reasonability. Okay. T. Chirindo, I see you're unmuted. I'm not sure whether you want to jump in and chime in or that's a mistake.
Oh, sorry, that was a mistake.
Okay, no stress, no need to apologize. I'm not sure what your comment is about there, covering up the context. Deferred tax should be removed, absolutely. Hendrina agreed. Yes, because the primary schools were not performing since the control line. Okay, I'm not sure what you're referring to there, blessings, but I do agree that they're not performing. Okay, immediately before the initial classification of asset as held for sale, the carrying amount should be measured in accordance with applicable reference. Absolutely, agree. Cool. And yeah, and T. Chirindo, please jump in and engage with us. I think you have been. I'm not actually sure. I don't think so. So please just jump in and speak your truth.
Yeah, let me do that jump in as well.
Sure, jump right in.
If you can go back to the exercise that you're doing, I just want to confirm something because I've been noting this throughout the year when it's the review time. Are we, like the part that you highlighted, add-back depreciation and stuff, are we looking at this together with the note 1, or you, I'm just asking this because I've seen in the past, the other colleagues were saying, even without looking at the notes, you know, you can pick up some issues that are like too obvious, you know. So I wanted to understand the approach we are following as we speak to say, are we looking at both, you know, or you just say, just perusing this, you can pick up 1, 2, 3. I just want to confirm that part. What approach are we using there?
Yeah.
And what's recommended? What would you know?
Kulekani, you raise a fantastic question, and yeah, I mean, I'm glad that you raised it because I can't believe I forgot to mention it before we jumped in. Okay. it's very important, at least my advice, right? Because I mean, there's many ways to skin a cat. But my advice in terms of how you should approach reviews is you need to approach it systematically. It's very clear when you assess APC responses. It's very clear to see somebody that hasn't approached the review systematically. And when you don't approach your review systematically, you don't get coverage and you don't get a competent outcome. So how do you do it systematically? Now, when I'm working through this, right, notice how I am not going to this note to read further what's going on here, right? Because I'll get there when I get there. Because to your point, even just by reading this thing whole, right, without looking at the detail, sometimes the errors are so clear that you don't even need to read the extra information, right? And you can already start getting those indicators, or sort of assess, demonstrating those indicators. And then when you, for those that you can't really sort of notice the issue, or you read and then it turns out that, oh, actually, by the way, there's an explanation that actually makes sense, right? You can get there when you get there. But it's important to have the bird's eye view of the review first. The first cold, almost look at it as a cold review. See all the low, so I call these low hanging fruit, right? Because the mistake will be so obvious that you shouldn't be missing it, right? It's low hanging fruit. As soon as you get down here, this is when it gets tricky. It's because the details, now examiner has to explain what's going on, right? So now it gets a little bit more tricky. Here, no explanation, it's just glaringly wrong. Okay, now, another reason why I advise going it about this way, right? I'm not saying, okay, I'm going to read number one, then I'm going to come down and read this note before I make conclusions. It's because what always happens, what invariably happens, and not always, but it will happen a lot just because of human nature, right? You're going to read up here, okay? And then you're going to read number one here. And I promise you, there's a significant chance that you're just going to go and read number two, right? Because you're reading in order, right? And then you're going to read number three. And then what's going to happen? You're never going to come back to reconsider everything up here. Okay, maybe fine when you read 2, 3, 4, you're going to come back to see what it's referring to, but maybe there's an issue here, maybe there's an issue here, maybe there's an issue here, and you're never ever going to consider these 3 lines again because of just like how human nature works. By the time you get here, trust me, you're gone, right? You're never going to go back. So that's why it's very important. Then even like here, right? You do the same thing. Okay, there's no references here, but anyway, they like references like this. I would recommend review this in its own, pick out the low hanging fruit, and then look at note number 1. Then, okay, come back here to remind yourself, okay, cool. What is note number 1 referring to? Okay, fine. These were my thoughts. Okay, sorry. These were my thoughts on this thing. Let me read some more information. Maybe I've got like an explanation or something along the lines in note number 1. I hope that answers your question. It was a very important question to ask as well.
Yeah, I think I then have a follow-up question, and the question is, when do I do this? By when I'm referring to the 2. Okay, so round 1 will be me reading the entire IOD.
Yes.
From A to Z. That's like, okay, and then I'll just talk from personal experience. As I do that, I'll be picking up tasks and saying, okay, sharp, I think task D, I feel comfortable. I'll start with task D, you know, that's how I do as I read the entire IOD. So when do I do this? When I say now, okay, sure, task D, I'm doing task D.
Yeah.
That's when I need to do this exercise, basically.
Correct.
Now, because I would have already read the notes somehow when I was reading everything.
Yes. Yeah. So it's not to say that your first read, you shouldn't be picked, because I mean, when you read it the first time, you are going to be picking up issues here and there, right? But the first time you're reading it is more to just contextualize everything, to get the lay of the land, to check the extent of the damage. By damage, I mean like the task at hand that you have for the day. What have you been asked? What are you remembering from your research, linking back to your research? It's almost like a lay of the land. Okay, at least this is my view, right? Because I mean, again, there's many ways to skin the cat. First read, lay of the land. But I mean, but you're still going to read things that can be a glaring mistake, right? So maybe it says the amortization of goodwill, right? I'm hoping you're going to pick that up in your first read, right? And you're going to put a comment there, okay, this is definitely incorrect. You can't amortize goodwill, right? But then when you say, okay, fine, sharp, I'm doing task A now. You do it again. Now you, in more detail. Okay, fine, I read through this, but first read, I didn't really pick out any issues. Now let me sort of pause. Okay, read this again. Okay, I'm reading this again with the context of what this calculation is trying to do, right? Because I've got that for my first read, lay of the land. Okay, so I know that the objective is to get from this number to an adjusted NAV number, which I'm going to compare to a fair value to get a fair value gain or loss. Oh, sorry, if it's by remeasurement. Cool. So then now you can say, fine, these are my expectations of the other sort of reconciling items like we did earlier on. And then cool, let's go one by one and see what my thoughts are, sort of high level without considering the detail. And then when I'm done, okay, I can go back to my expectations. Okay, what did I expect to see that I didn't see? Okay, and I've got more points. Okay, this was missing, this adjustment was missing, this adjustment was missing. Cool. Now let me go into the detail of reading these points. Does that answer your question? Now, your follow-on question.
Sure. No, I'm covered now.
Fantastic.
Thanks.
Fantastic. Guys, and ladies, we've been at this for an hour and a half. So let's take a bit of a breather. I'm going to give you slightly less than 20 minutes because we have a lot to discuss. When we come back, we'll just continue reading on. We'll just spot read this thing, right? So I'm going to skip a few lines here because we need to get to this part, talk about a few things here, and then we're going to move on to the next task. So let's be back at 7:50. Okay, so I'm going to give you about 17 minutes. Okay, let's return at 17. Sorry, not 17. 7:50. Right. See you soon.